Welcome to Gayatri Classes. I am Jagdish Pari, Finance Taxation Professional and JD Edwards Consulting. After working with various industry segments for almost 40 years, I retired from the corporate world. For the past 10 years, I have been imparting training on finance, GST, and Oracle JD Edwards Enterprise One. Most of my students come from science and engineering background to learn JD Edwards Finance, Distribution, and Manufacturing modules. I understand that they may not have knowledge of financial accounting, so before commencing training on any JD Edwards module, whether it is finance, distribution, or manufacturing, I spend about a week teaching them core finance. This ensures they encounter no difficulties when interacting with finance professionals in their careers. I deem this essential because finance serves as the backbone of all industries. As such, every person working in any industry must know how to prepare accounts for a business. Keeping this in mind, during the first week of the training period, I teach them all the basics, including commonly used finance jargons, terminologies, and accounting concepts. This enables them to understand the logic behind assets, liabilities, owner's equity, revenue, and expenses, as well as why only assets, liabilities, and capital accounts appear on the balance sheet, why other accounts related to expenses and revenue go to the profit and loss account or the income statement. Additionally, I instruct them on how to create journal entries, post them in ledger accounts, and prepare trial balances, profit and loss accounts, and balance sheets. By following through exercises focusing on core financial accounting, their confidence grows, enabling them to confidently pass journal entries, post them into ledger accounts, and prepare trial balances, profit and loss accounts, and balance sheets. Once they are comfortable with these basic accounting activities, I begin teaching modules relevant to their chosen area. There are many videos in the core financial training series, and this is the first part. All the videos in the series are worth watching. So, to receive notifications, please subscribe to the channel, press the bell icon, like and share. Now, let us watch the recorded class.
I'm getting some loan from the bank, or I'm getting amount from someone, like I did today from my friend. So just promise I'll give you this amount in the upcoming weeks.
Okay, I am coming to this topic.
In business, it is impossible to transact the business on day-to-day basis by making cash payment or back payment.
Okay, sir.
It is not possible. So we bring the goods to our premises.
Mhm.
Say you are dealing for the first time, then your supplier may not believe you.
Correct.
After say 5 or 10 transactions you are buying regularly, you are having your shop or showroom, you are making payment then and there.
Mm.
Ultimately, the supplier will start trusting you. Or
Yes,
you,
sir.
you may definitely ask him, it is not possible for me to make payment then and there. So would you please allow me a credit?
Hmm.
Credit means you will make payment in the future.
Yes, sir. Okay.
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 So you are promising, okay, you give me 50 pieces computer worth rupees 10 lakh or whatever it is. The
Mm-hmm.
supplier has supplied you by making the bill in your company name,
Yes, sir.
and you have brought all those computers to your showroom, And according to the terms with the supplier,
Yes, sir.
you will be making payment within 7 days, 10 days, 1 month, whatever the terms or condition are there.
Okay, sir.
So you are transacting, but it is a future promise commitment. In future you will pay. So this is promise,
Okay, sir.
isn't it?
Yes, sir.
One is transaction by way of things.
Yes, sir.
You bought computer, given check, given cash. Both are things.
Yes, sir.
Second, you bought services.
Yes, sir.
You bought services for training from me and you are
Yes.
making payment by check, by bank transfer, by cash, whatsoever. So this is second form of transaction and third form is promise.
Yes, sir.
You took the goods, you took the services and you will pay in future. Take an example of postpaid mobile services. One is prepaid, one is postpaid.
Correct. Yes, sir.
That means in case of postpaid, you are utilizing the services of the service provider and you promised that at the end of the month you will pay, it is promise.
Correct. Yes, sir.
And the fourth way of transaction is profit and loss. We
Yes, sir.
also, in our business, we also deal in profit and loss.
Okay, sir.
How? As a businessman, you are doing
Yes.
your business,
Mm-hmm.
you are going somewhere, you found a bag, someone forgot somewhere, and there is a laptop in it.
Okay, sir.
What you will do with that laptop? First, you will try to find out who is the owner so you can give it back to that person.
Yes, sir.
You have tried so many ways. Your intention is very good that I should find the owner and I will return them. You do not trust with the police. Police will not return. After
Yes.
searching, you thought, okay, I have not found the your owner. Your intention is not bad. So what you will do, you kept the laptop with you. Have you paid any consideration for that? No, not a single penny.
Yes.
Say it is a second hand laptop or it may fetch a value of 15,000 if you are going to
Mhm.
sell in the market. So this is your profit. If you lost something, then it is your loss. You lost your laptop. You are a businessman, so that is your loss. So in this way, we transact day to day business.
Okay, sir.
But in our accounting books, you will not find this type of clarification. You will find simple dual concept of accounting, that means accounting equation.
Okay, sir.
And secondly, you will find something like this golden rules. Can you see this golden rule?
Yes, sir, I can see.
Okay. So we will come to this point later on.
Sure, sir.
See, this accounting equation is not very old. Maybe 40 year, 50 year back, this concept came. Asset is equal to liabilities plus capital. Capital is equal to assets minus liabilities. And liabilities is equal to assets minus capital. You
Yes,
will
sir.
find this type of thing in accounting books, class 11, 12, whether it is state board or central board of secondary education. You find these things and the golden rules.
Yes, sir. Yeah.
But nowhere you will find this type of explanation, concept.
Yes, sir.
So here just to make it clear, I have just mentioned the dual aspect.
Okay.
There is no need to go in details. If you want me, I can explain all these things. If you so desire, I am ready to explain all these things, this equation, golden rules, no matter.
Yes, sir. Just at least one liner. What all it says to understand the equations.
Okay. See, because you are working in a company,
Yes, sir.
definitely you might have heard two terms, asset and liabilities.
Yes, sir.
In balance sheet, only asset and liability appear.
Okay, sir.
I think you are aware of it. In balance sheet, you will find only asset and liability. You will not find a revenue and expense.
Yes, sir.
So why asset and liability comes in balance sheet? Asset and liability are for running your business. It is
Okay, sir.
required for long term running of the business.
Yes.
Expenditure, expense or revenue are for a particular year. But asset and liability are for running your business for many, many years.
Yes, sir.
So things which are required to run the business for a longer period, those are called asset.
Okay,
Here
sir.
I have mentioned asset. What are asset? Things, machinery, building, furniture, your inventory, whether it is raw material or finished goods,
Okay.
those are your assets.
Yes, sir.
You have machinery. A machinery you have purchased, it may last for 10, 20, 15 years. It is
Yes, sir.
required for running the business.
Yep.
Furniture, in your office, it is required.
Yes.
Computers, which you are using or your employees are using for uh, day-to-day working.
Yes,
So
sir.
those computers are also your asset. Your
Yes,
raw
sir.
material, if you are having a large showroom, whatever you are selling, those are your inventory. So these are assets. These are things. Second comes debtors. Debtors, our customers.
Yes, sir.
You are selling not cash but on credit also.
Yes.
So in that case, your customers will pay you in near future.
Yes, sir.
So those customers, in business terms, in term of finance, we call those debtors.
Yes,
Debtors,
sir.
this is a part of account receivable. The second term debtors, customers, those are account receivable. We will get the money from them. So those customers or in finance term debtors are our assets.
Yes, sir.
Next comes prepayment. Prepayment, prepaid expenses. Take an example of insurance.
Yes, sir.
You are having your financial accounting running from 1st April to 31st March of the next year. But you have got your stock insured in July. You have bought some vehicles in November. So definitely the insurance company will make the insurance policy for your stock for the 1 year, for your vehicle for 1 year.
Yes, sir.
But you have purchased in July and November, and your financial year ending on 31st March. So
Yes,
your
sir.
expenditure for the year is the portion of that amount proportionate date, and the remaining amount which is going in the next year, that is called prepaid expenses. That is your asset.
Yes, sir.
Later on, gradually, you will understand all the fact how this entry goes. I will explain you.
Okay, sir.
And now one thing, assets, I forgot to mention here. Let me mention it now.
Cash in hand in bank. Okay.
Cash in hand, or okay, I won't write at bank now. You will be confused. Cash in hand. You are having cash, that is also your assets. And what are
Okay.
liability? I will come to this equation, okay, but let me explain this.
Sure, sure, sir. Yeah.
Liability, you have taken loan from bank, financial institution, from your friend, whosoever. You are supposed to return that money in near future, maybe in
Yes, sir.
installment or whatsoever.
Yes, sir.
So those are your liabilities. The
Yes, sir.
second thing, your creditors, supplier to the business.
Yes, sir.
You are dealing with 10, 15, 100 suppliers. They are supplying you different type of goods, and
Yes,
you
sir.
will pay them in future.
Yes, sir.
So this is your liability because you are required to pay them in
Yes.
consideration of what you bought from them.
Yes, sir.
And the third one is outstanding expense, due but not paid.
Okay.
Just let me show you the example of salary and wage.
Yes, sir.
So many organizations, even today, they make payment of salary and wage in the following month,
Yes, sir.
not at the end of the working day of that month. I am not talking about this multi-level, multinational companies. They are making payment 3 4 days before or at the last day of the month.
Yes,
But
sir.
still in trade and industry there is a practice that the employer make payment of salary and wage in the next month by 5th, 7th or 10th. This is the practice, usual practice.
Okay, sir. Okay.
So expenditure for say December 2022 end and the salary and wages was not paid, it will be paid in January 2023.
Okay.
So the liability on account of salary and wages, you will, if you are making the balance sheet monthly, then you will have to keep this in mind because this liability is not for the month of January, it is for the last month. So you will take care of this amount.
Mm-hmm. Yes, sir.
One more thing. So why I mentioned here liability? Why I ignored owner's equity?
Okay.
Owner's equity does not fall under liabilities.
Okay, sir.
When you are starting a business, always business is separate from its owner
Okay, sir.
because you are investing some money in the business. Why? Because you want to earn profit. So
Yes, sir.
you are separate and your business is separate as far as the financial accounting is concerned. So you deployed an amount of rupees 10 lakhs. You have started the business. Money is
Yes, sir.
needed for that.
Yes.
So you deployed a fund of 10 lakhs rupee just to start the business because for starting the business You need goods which you are going to sell.
Yes.
For establishing office, you need furnitures and all other things. So you have pumped rupees 20 lakhs to start the business.
Yes, sir.
So the business has got 10 lakhs rupees from you. Business owes 10 lakhs to rupee to you.
Yes, sir.
That is 10 lakh rupees owner's equity. That is your money.
Yes.
So 10 lakhs you pumped in your business. So 10 lakhs is liability for the business. Business is supposed to pay to the owner 10 lakhs rupees.
Yes, sir.
It is your capital. And since you have brought the money, so this 10 lakhs cash is your asset.
Yes, sir.
On the one side, it is assets by way of cash, but on the other side, it is a liability because business is liable for you.
Yes, sir.
So owner's capital is always, it is although it is a liability for the business, but it is not treated in liability in this type of liability.
Yes, sir.
In case of loss in the business, your capital will reduce.
Okay, sir.
In case of profit, your capital will increase.
Okay, sir.
In case of loss, you cannot say to a bank that okay, my I have sustained so much of loss, so I will not pay your debt. They will not, you are supposed to pay them.
Yes,
You
sir.
cannot approach your creditors. I have incurred a loss in my business, so I will not pay you. They have nothing to do. They will ask you, okay, you are required to pay us.
Yes, sir.
So if you incurred a loss, then the loss amount will be deducted from your capital.
Yes, sir.
If you earned a profit, then your capital will increase. So that is why this equation is like asset, all these things is equal to liabilities plus capital. Liabilities, all these things and owner's equity. And this capital, owner's equity is equal to asset, these things minus liability. And liability is equal to assets minus owner's equity. This is the simple equation.
Okay, sir.
If you have any question, you please tell me.
No, sir, I'm good.
At a later stage, if anything comes in your mind, you please jot down.
Sure, sir. Sure. Yeah.
Okay, now I am coming to the second slide.
Yes, sir.
Can you see this golden rules?
Yes, sir, I can see.
See, before coming to this golden rule, I think let me explain. Can you see this
Yes,
concept
sir.
behind the accounting entry?
Yes, sir, I can see.
Here it is give and take formula.
Okay, sir.
Take refers to what we take.
Okay, sir.
You are the owner of the business. So
Yes, sir.
what you are taking in your business, you are taking computers, chairs, pen, equipment, all these things, mobile
Yes, sir.
recharge, book, etc.
Yep.
So here you forget about these golden rules.
Okay, sir.
You simply keep in mind that whatever we are taking in our business, those are debited.
Okay, sir.
And whatever we are giving in consideration of getting,
Yes,
those
sir.
will be credited.
Okay, sir.
All these things will be clear to you within 3-4 days.
Okay, sir.
I
Okay.
will teach you each and every aspect. accounting entries, journal entries, how to post them in the ledger, how the balance sheet is prepared, how the trial balance is prepared.
Okay, sir.
Because you are coming from a different field. So I think
Yes.
it is my duty to explain all these things to you well in advance because ultimately you are going in the next thing, JD Edward.
Yes, sir.
So when you work as a consultant, most of the time at client side, you will share all these things, asset, liability, debtors, creditors. So I will clear all these finance jargon
Okay.
terminology well in advance. So in your life, you need not struggle later on in these what is debtor, what is credit, what is debit, what is credit.
Yes, sir.
That is my
Yes.
aim.
Okay, sir.
And every person who is dealing with finance, whether it is SAP FICO or JD Edward or any other ERP software, if you are dealing with finance, then all these terms should be clear in your mind.
Okay, sir.
In
Yeah.
that case, there will not be any confusion when you deal with your clients. At client side, these are the proper term. If you talk to me, because
Yes, sir.
say I do not know JD Edward, definitely I will speak my language.
Yes, sir.
As a JD Edward consultant, you will use your language.
Yes, sir.
If you know both the language, JD Edward knowledge and finance language, then everything is clear.
Yes, sir. Yeah.
So that is the reason I am telling you. So you keep in mind this concept behind accounting entry.
Sure, sir.
What
Yeah.
we take and what we give. This is see, we are taking. So whatever you are taking, please debit those things.
Okay, sir. Yeah.
Simple as of today, it is enough. You must debit. What is debit? I will tell you later on. And whatever you are giving,
Yes,
those
sir.
should be credited. Here, give
Okay.
refers to what we give. What
Yes,
we
sir.
give means business. And what
Yeah.
we take, we means business. We means business on both sides.
Okay, sir. Yeah.
Whatever you are taking, it should be debited. And whatever you are giving, it must be credited.
Okay, sir.
Both sides will be equal. Here she computer 70,000, you given check SBI 70,000.
Yes, sir.
Here you bought share 10,000, you paid cash 10,000. Here you
Yes, sir.
bought fan 5,000,
Yeah.
you paid cash 5,000.
Yes, sir.
Here you bought equipment 7,000.
Mm-hmm.
But see, I have written bought from Krishna to pay after 30 days. This is promise.
Yes, sir. Yeah.
Have you paid anything to Krishna then and there? No.
Yeah.
You bought the equipment, but you have not paid anything. But you have promised to the Krishna that you will pay after 30 days. So this is your
Yes.
promise. So you are giving promise here.
Yes, sir.
As I have shown you here, promise.
Yes, yes, sir.
So here you are promising. Okay, I am not giving you cash or check right now, but I
Mhm.
am promised to pay you 7,000 rupees after 30 days.
Yes, sir. Yeah.
So in accounting entry, both debit and credit amount remains equal.
Okay, sir. Yeah.
There should not be a difference of single penny.
Yes, sir. Yeah.
Otherwise, your trial balance and your balance sheet will not match.
Okay, sir.
So that is why in accounting we pass both entry for the same amount.
Yes, sir. Yeah.
Debit is equal to credit. credit is equal to debit. There should not be a difference of single penny.
Yes, sir.
In case of your mobile recharge, 1000. So what you have taken? Services. Mobile recharge 1000. You paid cash 1000. Equal.
Yeah.
You bought books 1800. You paid cash 1800. Equal.
Yeah.
Stationery bought 500. You paid cash 500. You paid electricity bill. Okay. Electricity bills means you are taking the services of electricity department.
Yeah.
So you are taking electricity
Yes.
2000. So you have paid by check of Punjab National Bank 2000.
Yes, sir. I understand, sir. Yeah.
Okay.